Austin asks, AK, we'll let you answer this one. Is it best to become pre-approved by a lender who's located in the area that you are planning on investing in?
Our lenders are nationwide. Most of them can lend in every state. So if you talk with lender A or B or C, they're licensed in all these different states. So it doesn't really matter. You can always ask them what state you're thinking or what market you're thinking about investing in, but most likely all of ours cover. I think, for example, TCF bank, they don't do loans in Texas, but they loan everywhere else. But pretty much, and actually when you go into our markets, do we still have that lender tab? I can't remember. There used to be a lender tab on our website, or I'm sorry, on the how to invest tab. Under each market, it will tell you what lenders actually work in that market. And you'll see like 99% of them work in all the markets. So no, it's not necessary.
And like TCF is based in Ohio, so if you're buying a property in Ohio and the Ohio teams like working with them, that might be a reason to lean in that direction.
All right. Peter points out that non-conventional lenders do portfolio loans as well. I think that's a good point to make too. That's a way to free up your conventional loan slots sometimes, fill them up, and then go and find a lender and get a portfolio loan on the 10 and start plugging away at the conventionals again.
Yep.
All right, guys, we have a lot of questions coming in. If you've got some questions, send them in. We'll start working our way through these. David contributes, this must have been from when we first started, that in Orange County, California properties up to 750,000 have an average day on market of 19 days. So yeah, even to your point, Aristotle, even less than a month of supply.
That's an average. I've seen homes going to contract within 3 or 4 days before it even gets that long. It's crazy.
I'm about to enter the space of buying a primary, and I'm like dreading it because I don't want to compete, but I am so one to get emotional about a primary, especially when I know I'm going to be living somewhere for a little while. But I think I better brace myself. All right, notice that the terms in RealWealth affiliates contracts have changed to include things like they can make changes without approval, change requests will be $500 each, and they may not be accommodated. Because the property won't be done until Q4 2021 or Q1 2022. They wouldn't attach blueprints. Let's see here, it's blocking the rest of the question.
What market is that? I haven't heard of that.
I don't know. They wouldn't attach blueprints, just that so it's one of the new builds, a 4-bed, 2-bath home. I was concerned if the builder's expenses increase, will they cut back? I mean, I think this is the risk of new build. So here's what my thought process would be this, because I know that there's some builders in some markets who their contracts are definitely skewed a little bit more in their favor, maybe arguably as they should be under these circumstances, but I would consider how much earnest money they're wanting me to put in on this deal. If it was someone who wanted me to put 10 or 20% down as earnest money to get a new build with these kind of terms, then I probably wouldn't be willing to do that. But if it was only a $2,500 or $5,000 earnest money to take a little bit of a gamble that things will work out fine, that might be something I'd be willing to do for the right kind of deal. So I mean, I think that is such a personal thing that you've got to decide, is that a risk I'm willing to take or not? But I definitely think the market says that the sellers get to be a little bit more picky or a little bit more bold in some of their requests, unfortunately. Doesn't mean you have to answer, doesn't mean you have to accommodate, but they get to ask. All right, I think we answered this one here. The question, we'll just repeat it because I suspect this is a good question actually. I'm on a waiting list for a property. They quote a price, but I don't have an address or a contract yet. Do you think it's right for them to change the price on you weeks later after you've been waiting and expecting their original price? AK, you already kind of addressed that one earlier. Why don't you kind of recap?
Well, so I don't know if he's talking about, so wait list, not under contract. So yeah, I mean, is it fair? No, but a lot of things in this market aren't fair, but it shouldn't happen that often. But like I said, I've seen it once or twice where they did increase the price because let's say you're on a wait list and 30 days is a long time to wait for a lot. And again, the builder calls the shots and they can just say, hey, yeah, we have so much demand. that we're going to increase prices, or again, maybe lumber went up, or all these different expenses go up, they do have the right to raise that. So I guess the question is, he says, what exactly does it mean to builder choose from the wait list? So basically, yeah, I mean, it just means that you have that risk going into that. You have the risk of it going up, and you know, if you don't want it, then yeah, then obviously you don't take it. But I don't think it's a bad deal. Again, kind of going back to Leah's financing model. It's like, if these houses are going up every 30 to 60 days, which is probably not that much, maybe if they do, but you put the property into contract, let's say it doesn't close for 6 months, you're probably going to have a decent, you know, you should have a little bit of equity in the house when it closes if it's going up that much in that area. So that's, you know, that's the plus to it. So I guess you have to look at the big picture, not just,
Yeah.
you know, in the beginning here. What do you guys think?
Yeah. Well, and I mean, a reservation is not a contract, unfortunately. So you got to take that for what it is.
Correct.
Okay, Satish says, since cap rates are going down, I think looking for homes that appreciate well in the future will be a good approach right now. Do you suggest any markets that offer single family new homes in A or A+ neighborhoods that appreciate well but might not have a good cap rate?
Well, a lot of the
Joe?
Florida markets would fall into that category, like Tampa. It's right on the coast. It's near the beach, beautiful beaches. Everybody wants to live there. A lot of golf courses, a lot of growth going on there. So because it's close to the beach, the prices are higher and it'll appreciate more and cash flow less. So that would be a good area, west coast of Florida.
Yeah, anything where, I mean, and Kathy's talked about this on our webinars a few times, you know, and we talk about it over and over, but any place where the population is growing, you know, massively. I mean, and we talked about parts of Texas, parts of Florida, the South and the Southeast, the Carolinas, that's where you want to go. You know, Cleveland, Cincinnati, Indianapolis, those are great markets because the price points are still relatively low, but there's not a ton of growth happening there. So if you're wanting a lot of appreciation potential, we definitely don't, RealWealth Network does not guarantee or say, hey, buy here or invest here because it's going to go up. But we say projected because we see all the growth happening, and it's just part of the process. When there's lots of people moving there, lots of appreciation is going to probably happen most likely.
Yeah, Florida passed New York as the third most populous state in 2016, and they're growing. The population of the state is growing by 300,000 a year. So with the population growth, there's more demand for housing, so rent should go up and property value should go up. Charlotte, North Carolina, just passed San Francisco as the 15th largest metro in the United States. So that growth is going to continue, and so that's another area where there's a price appreciation likely.
Yeah. So someone mentioned here that there was a change. The builder that we had been working with in Charlotte was building steel framed houses, and then he let them know that they're switching to wood because their steel supplier couldn't meet their needs. Oh, my dog has joined us. So that is right. The builder that we work with in Charlotte did have a supply issue with their steel manufacturer, and so they were not able to deliver the steel frame homes as they had hoped. I do know that when that first happened, they reached out to everybody who had a steel frame home under contract and gave them the offer to terminate the contract without any penalty. So it's unfortunate. I know they're still hopeful that the steel frames will come back, but for now they're building with wood frame as well. Still recommending Dallas after the power and water fiasco. Oh, too soon, Dan. As a Texan, I have to say that. As a Dallas native, I have to say that. I think it was a cluster there for a week or so, and maybe arguably still in some places, but it hasn't changed my opinion about investing in Texas. What about you, Joe?
No, it hasn't changed. These things happen and they come and go. Next year it'll be another metro. So it's the long-term prospects for Dallas or for Texas in general is up. So that's just a temporary setback.
So while we're on the topic, no, go ahead, AK.
I was gonna say maybe it'll slow down all the Californians moving to Texas.
Well, I feel like that's where the comment came from. There's this California-Texas rivalry, so someone's got to get it in, Dan. I see you. Joe, while we're on the topic, Ming wants to know a little bit more details about your 1031. Why did you decide to sell your property in Dallas? Was it because of a low ROI, or what was the reasoning?
Oh, well, that was just, I've had it for a long time, since before the crash, and it doubled in value. And then I had a tenant who lost his job and wasn't paying rent due to COVID. So I made him a deal, just get out by the end of the month and I won't come after you for the back rent. So that guy left with his family, and I fixed the place up and it was vacant. So it was as good a time as any to sell. But Dallas is still a good market.
Yeah. AK, what about you? Are you doing any repositioning of any of your properties right now or thinking about it?
Hmm. You know, I don't like to sell anything. I don't know. For some reason, I just don't like selling anything. And I know if I sold the property, I mean, I get called, I don't know about you guys, but I'm getting text messages and phone calls and postcards in the mail for like all my properties. Hey, I saw your property, you know, what do you want? And I keep telling them, I was like, okay, I want market value. Give me market value. And they don't want that, right? They want to give me a deal, and I'm not going to give them a
Sure.
deal. But no, I mean, I thought about refinancing some of my homes, but some of my homes are like, the loan amounts are so small that it doesn't make sense to do it. But no, I'm actually considering my next property. I'm actually considering buying a new construction this year. Don't know where, but no, I'm not going to sell or to do any 1031s on my properties right now.
All right. David wants to know regarding financing qualifications. What if you're self-employed? David, it's all right to be self-employed. You might have to submit a little more paperwork and a little more proof of your income level, but you can absolutely get a conventional loan being self-employed. Just be prepared to jump through some more hoops. All right, a couple questions about the slide deck. We are recording this, so we will get this posted usually to the investor portal by the following day. So for those of you who want to kind of revisit these slides or go back and hear this again, we'll get that replay posted. It should be under the recent webinars section. I believe this one will be public, so this might, you know, stuff where we don't talk about our specific teams, we make available to everybody so that everybody can benefit from this. So this one might even end up on our YouTube channel as well, but we'll definitely get it posted so you can watch it again.
Hey, here's a good question that Kurt asked. He asked, how do I decide if I should sell the property or sell a property and reinvest or hold it? This is a great question because, right, people are like you were just telling, you're asking me, Leah, like, am I going to reposition? Am I going to sell my properties? Joe did it, just did the 1031, or he's getting ready to finish his. And so that's a question I get a lot from members. They say, hey, should I sell? I bought a property in Cincinnati 6 years ago, and it's got 30 or 40,000 equity. Should I sell it and buy something else? And Joe, let's start with you. What do you think your take is? If someone's owned a property for several years, do you think they should sell it?
Well, it depends if it's gone up enough, because remember, you have closing costs. So it has to have appreciated enough so that even after you close and you pay the closing costs, you still have enough money left over to make it worth your while. If you bought it for 100 and it sells for 120, and then after closing you still get 100, then you haven't really helped yourself much. So a lot of it depends on that. And the other option is to refinance the property so you don't have to sell it and incur the closing costs, and just liberate some cash and use that to buy more properties. As long as when you refinance, the mortgage payment's going to go up. So as long as it's still cash flow positive after you refinance, then it's worth looking into.
Yeah, I think you also want to consider where you are at in that amortization schedule too, right? I mean, if you've owned a house for 10 or 15 years, you're into that really lucrative principal pay down piece. And so even a refinance might not be as good. I mean, like you got to consider like how much, it's not just about the payment, but it's also, you want to think about how much of that principal is accruing with my name on it that I get to get when I sell it. So, you know, I would definitely consider that as well. And I've heard that being great arguments for why you do want to hold properties for a little bit longer so that you can get to that efficient principal pay down. But I mean, I have some properties that I don't love, you know, they're a little more high maintenance than some of my others. I've checked the values on them and seen that they've appreciated a decent amount since I bought them. You know, I can look at the interest rate that I have. So it's kind of a culmination of things that are kind of pointing me in the direction of, okay, this might be a good time, knowing it's a seller's market, you know, this might be a good time for me to just do some trading up potentially, but I've got to be prepared to fight for the replacements as well.
Yeah, for a lot of our California attendees or people that we work with, they might have inherited a property, or maybe they have a rental property and they're getting really lousy. Maybe they're break even on it, and you have 400,000 equity. That would be definitely worth looking at selling and exchanging.
Oh, it's a tax question here. I'm afraid to read it. Capital gains. Can we still sell a primary and exclude the first 500,000 of gains from tax?
Yes,
It's a
section
primary.
121 of the IRS code. You can avoid paying taxes.
Yeah, I think it's 200. Is it 250,000 per person or 500,000 for a couple filing jointly?
Yes.
Right. They haven't changed that, I don't think.
Yeah, we are not accountants, so take what we say as non-accountants. All right, I think we're making it through most of these here. Which lenders are experienced with loans with a solo 401k? You need those no recourse lenders, Dan. We've got 2 of them listed there. So check those out.
Here's a really good question for all of us from Tom. He asked, what events do you see would have to happen for the housing market in general to get back to a more realistic, balanced inventory? That's a great question.
Interest rates going up, so it's less attractive to investors, and fewer people can afford to make payments, and that will cool things off a bit. But that's not going to happen anytime soon, from anything I've read.
I think there's some people too kind of waiting to see how this government intervention is going to shake out a little bit. I think the mortgage forbearance thing, I know I have a tenant waiting to see how it's going to shake out. So I would imagine that there's some owners kind of having the same question. You know, they could sell their home, they're behind on their mortgages. So depending on, you know, what mortgage companies are encouraged to do to let you get current or what will be forgiven. I think there's a possibility once we kind of see some of that start unraveling that we might see a little bit more supply come back onto the market. I don't know that it'll be distressed, you know, and going way below market value, but frankly, we need some of that inventory. A 14 days on market average is ridiculous and not good for anybody, honestly. So we need a little bit of that pickup. But I don't think it's going to be anything like we saw last time, certainly.
And all real estate is local. So Florida, which has a long runway, is going to be growing, and this supply is never going to be able to catch up to demand. On the other hand, you have places like Toledo where you can get supply all day long, but then you're in Toledo. So you have to look at it market by market.
Yeah, but there are also the biggest thing too is that last year you had a lot of people who were scared to sell their houses because of COVID. I mean, let's face it. I mean, do you want 30 people walking through your house and to sell your house with masks on and stuff and touching things? I mean, it's pretty hard, right? So, but I think this spring and summer we should see a big influx, which I don't know if it's going to affect inventory for investment properties too much, but I certainly think that we're going to see interest rates go up this year. Maybe I'm being a little bit too pessimistic, but with all the $1.9 trillion Congress passed on that stimulus funds, that's going to really impact rates, and so I think it's going to have an impact. So you have less people buying, and that will help hopefully keep prices a little bit lower at bay.
Yeah. All right, well, I think we got to move on. There's a couple specific questions in there, kind of looking at specific deals or specific, very specific questions. These are the kind of questions and conversations we love to have with you guys on a strategy session call. So remember, when you join RealWealth Network, when you become a member, you are automatically assigned an investment counselor, one of us super exciting and friendly faces to chat with about all this. So if you haven't connected with us already, we would love to hear from you. Your profile is directly linked to ours, so you can scroll down to the bottom, click on investment counselor. It'll pull up our calendars. You can schedule a 15 or a 30-minute session to have a chat and to talk about which market might be the best match for you. On that note, I mean, as we mentioned earlier, kind of a teaser here for some of the insider information that we have. I mean, we all got word earlier this week that our team in Atlanta has some inventory that's coming. And so we are throwing together a last-minute property showcase where we are just going to be featuring the available kind of hot list deals from our Atlanta team. And we're making that available to our investors that we know are buying right now, that are looking for these deals. So if that's you, if you're sitting here going like, I need to be finding deals, I need to be finding inventory, I don't know if I'm on the list to be, included in that showcase or not, connecting with us investment counselors allows us to get you in the funnel so that you can start being brought into those kinds of opportunities, and we can help you as much as we can. So connecting with us is good for you, as especially under these market circumstances where inventory is far and few between. All right, guys, I think that is it for today. I always enjoy sitting down with you. I learn from both of you every time we get together. So for my benefit, I would love to do this more often. I know our viewers have thought the same. Thanks so much for joining us today, guys, and thanks for staying a little bit over the hour. We'll see you next time.
Okay, see you, Joe and Leah. See you, everyone.
Bye, guys.
Everyone.